Okay, you can start now.
All right, thank you for making time to be a part of this great conversation on routing to branchless banking in Africa. My name is Eugene Anangwe, and of course, I'm sure that the better part of today has been very fruitful for you. If not, then this session will definitely be a fruitful one. And I'm happy to see all genders represented on this session. And this is great. And congratulations to the organizers. But we can do better. You know, I can see it's actually 3 versus 1. And we can actually do better on gender balance on these issues. Let me introduce our panelists. Joining us on this particular session, Dr. Miles Hogan, Head of Channels at Universal Merchant Bank. Thank you for making time. You can just wave so that we can know. There you are. Thank you very much. Also with us is Koroti Osman. Your title was written in French. I left my French class before actually being taught the pronunciation of your exact title. So I'm sorry I'll not be able to mention it, but thank you so much, Osman, for joining us. Osman, you can just wave.
I don't think he's connected, actually.
All right, so he's not connected. Thank you for that correction. Mwangala Muyoyeta, CIO, Zambia Industrial Commercial Bank. Thank you for making time. And Martin Naor, who's the CEO of Banking Link. Martin, I can see your background is definitely speaking for itself. Thank you for joining us.
Thank you.
All right, so I want us to get into the business of this particular session because we also don't have much time. And we're looking at the topic being routing to branchless banking in Africa. And my first question would be, is this a long shot? Is branchless banking even possible in Africa? Because earlier on we were talking about neobanks, and this is a great continuation of that same conversation. Is this a long shot? Are we really, seeing too far where we cannot be able to hit? And they say ladies first, where I was taught, my parents taught me so well. And I'll be able to start off with Muyoyeta. What's your take on that?
It's actually happening right now. I'll speak for my country, Zambia. What we're seeing in Zambia is that all the major banks are scaling their branch footprints massively. And what you see reflecting all over is agency banking models and agents from all manner of providers, from the former telco sector, the mobile network operators, and there's masses of other agency models that are already in play in the Zambian market. So it's already happening, and they are moving more money. There's more FTs, funds transfers happening with the agencies than they are with the retail commercial branches. So with us as ZICB, we're a brand new bank in Zambia. We are only 2 years old. So when we set up this bank, we set up from day number 1 to go branchless. So we've only got 2 branches in the whole of Zambia, one in Lusaka, one in Copperbelt, and we are opening a 3rd one. But our transaction volumes is far, far higher than what we're doing with a branch, because all we did is that we've partnered with these agencies and with these agents, and they are delivering banking to the masses on our behalf. And we're actually beating the traditional banks and doing it at a lower cost base. So you can't run away from it anymore. It's real and it's happening.
Right. So it's not a long shot at all. Miles, I want to hear your thoughts on this, because we have seen over time a lot of banks measuring their strength through the number of branches that they have opened. Every time they open a new branch, it's usually a big milestone followed by big celebrations. And even on their portfolio, they say, you know, we are now available across, with having 50 branches across Kenya. And we are now even crossing the border with another branch in Burundi and another one in Rwanda. And here we are talking about routing to branchless banking. Talk to me about what you feel about this conversation, first of all, from where you sit.
Great, thank you very much. And very insightful points by Mwangala. Essentially, I'll say technological innovation has made a big difference. In the past, definitely, the big, let's say, brick and mortar, having the structure was very, very critical. But going beyond, with innovation, with a lot of digital transformation, it's become clear to a lot of banks and financial institutions that you don't need to have the physical edifice. You just need to be able to connect with your customers. And one critical imperative now is even using agency banking or even using a digital device. So most of the mobile apps are able to do that. Interestingly, research conducted quite recently across a number of countries, Nigeria, Zambia, South Africa, affirmed that a lot of digital transformation is making this branchless concept show that no, that the new wave is use digital and go branchless. Yes.
Right. All right. And if we talk a bit about the aspect of leaving others behind, this question is for Martin. We are talking about the aspect of going branchless, but we cannot be blind to the fact that branches have played a role in, allowing those who have no gadgets, who have no connectivity, who have no literacy, and when it comes to, technological advancements, but also jobs for those who actually work at these particular branches. Martin, from where you sit at bankingly, I mean, does this concern you? Does this give you sleepless nights? How do we marry the two? How do we balance this and we don't leave anyone behind at the end of the day?
I think it's, for me, one starting point there is going branchless is not an end on itself. It's not the objective. The objective is to take care of your customers in the best possible way for the transaction they want to do at that point, right? So we talk a lot about not necessarily having less jobs, but more about freeing your humans. For example, we try to use artificial intelligence and some stuff that will help you do the easy stuff or the repetitive stuff in a digital way that is more cost efficient, faster, better, etc. And then free your humans on the branch to have the meaningful conversations. And those meaningful conversations can happen on kind of both ends of the spectrum. One is on the inclusion side. When you are bringing somebody on board for the first time, maybe it's reasonable for them to have a human-to-human conversation. In some instances, if you do onboarding, digital onboarding, you do it well, and it's easy, and it's easy to do, maybe you don't even need a human on that side of the equation. But that is one side. So bringing people on board for the first time might be a very interesting human-to-human conversation. And on the other side of the spectrum is more complex financial needs. So I don't want a human involved in answering the question, what time is the branch open? When is my payment due? What is the minimum payment on the card? I want them having the conversation on, should I buy or should I rent my house? That is a place where you need and you want a human on the other side, right? So for me, it's not an end on itself, branchless. It's a question of having the right mix. Depending on which business the financial institution is, that mix might be 99% branchless or 99% branch-based, right? But it's going to depend on what business you are in.
Yeah, and it's very interesting because coming back to Mwangala, I mean, earlier on you mentioned that where you come from in Zambia, you purpose to even be branchless from day one. But I'd like to understand how you managed to cope with the different aspects of branchless banking when it comes to ensuring that that tagline at the backdrop of Martin, financial health and inclusion for all, is actually still achieved.
Yes, it is still achieved, and widely so. For instance, one of the biggest programs that we support is the farmer cooperatives in Zambia. And what you will find is that in our part of the world, in Africa, in Zambia, people don't have smartphones, but they've got USSD featureless phones. And so they are able to move money, transfer money, and be able to collect their input from regional perspective. They don't have to travel to a major center to actually transact, which used to be the case previously. So it's actually empowering rural farmers who would have previously really, really struggled to get money to a center, become a member of the cooperative, go back to collect their input. Now, the services are getting closer and closer to them. We actually had field agents going out there and just collecting the money, or they could send via mobile money. So it was one of the biggest successes in the past years, and it definitely did empower massive rural communities. So it can be a very empowering tool. I think the fear out there is that technology is always disempowering, but it need not be. I think if thought through really carefully, it can actually be a very massive, powerful tool that can revolutionize and change people's lives.
I like that you bring out that particular issue or that concern that is on the ground, that technology is disempowering, but on the real sense, it can actually be used as a tool for empowerment. Let me bring back Dr. Miles. We are talking about the aspect of ensuring that it is not an issue of exclusively using this and not using the other. This is what we heard from Martin, that it's not about that. We can actually do a mix of both. But from where you sit, what are the bottlenecks? When we specifically talk about branchless banking, what are the things that we need to actually work on to be able to, create a smooth flow of operations for those who want to go, branchless banking from where you sit?
Great. An aspect of Martin's rendition was about what the customer wants. And you realize a critical focus is about customer centricity. So you're looking at customers and trying to understand what are their needs, what are their touch points. And ultimately, any financial institution or bank is looking at what drives the customer to transact. What are the things that get customers excited? And in that case, that makes you know that this is the way to go. Another aspect is about looking at the economics. So the economies of the cost in terms of keeping a branch as against using digital. Is it more cost effective using more of our services online than in branch? And then another critical aspect is about interoperability. In Ghana, one very exciting aspect is we have a great collaboration between banks, fintechs, and telcos. And that is one area that is actually driving high volume of transactions. So it gets to a point where branches are there, but you don't really see customers walking in because he wakes up in the morning, can process transactions on mobile, continue on internet banking, and maybe at the close of the day, go to the ATM and then finalize the transaction. So there's a lot more around the spectrum when it comes to the flow. Yes.
All right. Feel free, by the way, if you have any extra thoughts from what one panelist has said, or if you also do not agree, you're actually free to do the same and just say, I actually don't agree with what he just said, or if you have a different perspective. But Martin, listening to Dr. Miles, it brings the aspect of the importance of partnerships. We are talking about technology and banking. And here we want to look at how to best create synergies so that the tech world can be able to offer the solutions that the banking world would really need to achieve this branchless banking, or even banks themselves jumping into the deep end of technological innovation. What sort of advice would you be giving from your own perspective or from your own experience on how best we can be able to move out or remove all these bottlenecks that probably could be hindering branchless banking?
I would say that in my experience, the key bottleneck or obstacle is culture. Is the traditional institutions have deeply held beliefs around the key metric, as you were describing at the beginning, the key metric that shows the power of an institution is the number of branches, right? And that drives a whole lot of behaviors internally around how the company thinks and decides and who they promote and who they fire and who they hire and everything, how they behave. That, for me, that's the one thing that is the big bottleneck. And then everything comes below that, right? Because if you are making non-digital decisions or paper-based decisions and your whole credit process is paper-based, it's irrelevant if you take the customer, if you make the customer onboarding online, but then you print it and you move it through 5 steps of a paper-based process, then there is no branchless banking to be done, right? You just digitize one form, not your institution. So I would say that is, and that also applies to, going to your question, to partnerships, right? It's very difficult for a company that is fully paper-based in its culture to partner with a fintech or a provider of digital infrastructure and stuff like that. Because at the end, there are no plugins, right? It's my plug doesn't plug in your wall.
But it's not there.
Yeah. So it's for me, I would say culture is the first thing, and then is, I would say, in many instances, what I see is a very poor definition of what wants to be achieved, right? Is why do you want to partner with this fintech to do what? To achieve it? It's never easy to start a project saying, I want to change my whole bank, right? Is, well, let's decide on one product, on one customer segment, on one something, and let's make inroads in there. Let's achieve some success, show the rest of the organization that this can be done, and then you move on, right? Yeah. Those could be my early thoughts on that.
Right. Mwangala, what's your take on this? Because at the end of the day, we understand that the cultural, aspect still remains a bottleneck. As Martin said, if I'm used to doing things this way, it's going to be difficult to make me do it in a different way. We know of people who actually, for a long time, believed that social media was actually a form of devil worship. But today, with COVID-19, they are the ones who are actually using social media to preach or to even pass on their messages. Talk to me a bit about how you, in your position and where you sit, managed to handle this issue of culture and cultural change.
I think you couldn't have said it better. I think COVID-19 has woken up the reality of we're living in a digital world, and people are much more accepting now. So for instance, we've had the ability to enable remote account opening and self-onboarding, and people were struggling to wanted to come to a branch, but now you tell them, no, you can't come to a branch, you've got to self-onboard. So it's like, okay, because of COVID, now I have to self-onboard and open my account remotely. But so what a big bottleneck that we have been struggling with is still KYC, know your customer, regulatory compliance. So we need to really think through this together with the regulators in terms of how we can make it a little bit easier to onboard customers. So we actually were saying, look, you could tap into things like voice recognition, AI tools, where somebody, instead of taking a still picture of themselves, actually moves, takes like a video of themselves and says something. So then you have the database, because our voices are everywhere anyway, we all know that. So we can actually verify that this is the person. But I think for us, the self-onboarding and the remote account opening, COVID brought it as a blessing. COVID has become a blessing, because now our customers are much more willing to do it on their own, and then just do that last step KYC, which is the moving of the papers, which we can't seem to get rid of currently.
All right, Mwangala, I see your video has frozen, but while we work on it, you're back. Thank you. I think, were you done? Do you want to have some more time to develop further your point?
Yeah, sure. We're talking about the bottlenecks. So it's the bottlenecks of trying to onboard people and getting them to accept the new trends, and the acceptance is there and it's growing. And I truly believe it's just a matter of time before it becomes standard that people feel they don't need to go to a physical branch to actually open an account. They can either do it with a field agents, with an agency, or they can self-onboard. So it is becoming real now, and thanks to COVID, I think.
Right. Dr. Miles, when you sit in those boardroom meetings to actually, discuss with your teams, new ventures and new ways of doing things, including partnerships with fintechs. What are the trends that usually come out from there, without seeming to be divulging some of the secrets from the board, discussions, but for purposes of learning for all of us here, from what we've had as the bottlenecks, and what do you think should be the way forward, if you may?
Okay, so from where I sit, it's cost is also a critical imperative. So very often at the top level, you are looking at making the best in terms of gains, and then try to minimize your cost. And ultimately, certain campaigns, for instance, you could decide to try and then transition a cultural change, like was rightly mentioned. People don't want to move from digital. So you could run certain campaigns like a data-free campaign, for instance. And that's a way of transforming the mindsets. People realize that, okay, I will spend this much moving from my house or office to the bank, as against not even spending data to use a mobile app. So automatically at that level, you're able to run a little bit of cost, but the gains are very, very, very significant. And sometimes even in terms of the advertising campaigns, there's a lot we do because you want to make services visible. You need to get people knowing that, yes, this is what you can do now using this platform or using this channel as against what you used to do. And all that is at the top level, how you can at least get everyone to support that, yes, this is the way to go. Finally, I'll say in terms of when it comes to competitiveness, we always try not to divulge too much, but we try and then pick industry insights and then get to know that there's a certain trend. Within Ghana, for instance, there's a lot of mobile usage, especially on the telco end. So we have a lot of the mobile network operators driving a lot of transactions. They've also been able to win a lot of customers. So any bank you think of, let us try and then mimic, copy, replicate, or duplicate those services and then push it as our own. And that is also making a great stride when it comes to making an impact.
Right. I see Martin seated very calmly, listening in very, very patiently. But when we look at the fields that we come from, Martin is from the tech world, while Dr. Miles and Mwangala are both from the banking world. Martin, without being diplomatic, I mean, are they expressing the truth on the ground, or when you go to their meetings or when we go to pitch, is it the same, mood or communication or message that they send? This is with regards to trying to understand better how we can create synergies, how we can understand each other and be able to know where each can plug in on the other. I mean, just feel free to tell us, Martin.
Yeah, I think there is a bias in the people sitting here are typically the ones at the tip of the spear in terms of the progress they are making, right? So you don't have the average panelist, you have the leaders. And that shows in the way, the depth of knowledge they have. I would say that's, in my experience, they don't show the average level of experience on digital you find a typical financial institution in Africa or in emerging markets as a whole. We work all around the world in emerging markets, and in general, is more. You start with. I would say I start probably 50% of my conversations with my people. My typical customer is too old for technology, and you say, okay, and who gave them the training or using WhatsApp or using Facebook? Nobody. They learned because they wanted to learn and they needed to learn and they wanted to call somebody. So real technology that is usable and intuitive and solves a problem does not need to be taught, right? Is what the technology that needs to be taught is the complicated technology, is poorly designed technology or very sophisticated. If you are teaching somebody to program artificial intelligence, okay, that you need to teach, right? But if I need to teach you a lot about how to do a transfer or pay your loan, it's simply because I designed poor technology. So I would say, in general, the average institution that I find is worried a lot about my average customer is old and will have a hard time learning. The other part is I see usually an overestimation of the lack of smartphones. And obviously that reality varies around regions and even customer segments, because maybe in a market you have a 70% penetration of smartphones, but in your customer segment, that penetration is 30%, right? So you really need to find a set of solutions for feature phones in specific niches. Those are the typical two objections I find in institutions that don't want to make the change, right? So sometimes I'm sitting with the general manager of a cooperative or a small bank or a microfinance bank, and they are talking to me because the board told them that they need to start the digital transformation or something, but they don't really want to do it. They have been mandated to do it, and they are just telling me their own reservations about why not do it. And that is a more general conversation than the one you hear from my fellow panelists here, which are obviously at the top end of thinking about this.
Right. Mwangala, listening to Martin express those challenges that the tech world faces when they come to pitch their ideas that would actually offer solutions. What does that make you feel, and what do you think probably the top management should be doing to be able to, pass down the same line of thought back down to their juniors who have to be able to meet those who come to see them for this? You see, he says the board told me not to actually take that, but probably him as the chief executive would love to, or the operations officer would love to, so of course you'll see that as a bottleneck. Mwangala.
Okay, I'm going to turn off my video because the quality of my line is deteriorating. And,
sure, that's okay. Yeah.
So the question you're asking is?
Yeah, so I was asking, from what Martin says, he mentioned the bottlenecks when it comes to partnerships, when it comes to engaging fintechs, the top management. Can you hear me?
Yes, I can hear you. I can hear you. Yes.
Right. You've got the question, or I continue?
Sure. No, I can answer the question now about top management and how you can actually partner better with fintechs and get your customers to accept the new solutions. I think what it is about the value proposition. So for instance, if you create a value proposition around a customer who's saying, look, for instance, I'm a really, really small SME and I've got to have access to some kind of funding, some kind of instant loans. And the mobile network operators here in Zambia showed us that is possible. So you profile that customer, and then at some point you say you instantly qualify for this kind of loan. That immediately picks up your customer saying, wow, you mean this works? I want to be a party to it. So it's just about creating the value proposition. The other bottleneck that I see in our industry is that because what we're doing is really new, and there's a lot of players on the market. There's literally fintechs emerging with very creative ideas almost all the time. And as an industry, we're really struggling because we still have our old legacy banking system. And here's people coming on with these new innovations. So what we do a lot is that from a technology perspective, a bank like ours doesn't have legacy systems to deal with. So we in open standard services architecture, and we've created APIs and we do integrations really, really quick on a technology point of view. But you then find that on the business side, the value proposition is not coming out as strongly, and the marketing is not as obvious as in what is the value proposition you're taking to the market. So that usually takes a lot longer, but we do eventually get it right. It just takes a lot longer, but this is clearly an industry that is in great transition, and it's the lead players now who are really partnering with these fintechs and creating that value and going to the market with proper marketing plans around the value propositions that are going to break free from the pack and be the leaders in the banking industry. So it's about creating value proposition, understanding your market, and making sure that you hit your target market with the right sort of product and the right sort of message that they are looking for. It's not just about every bank saying let's go digital. You're going digital. Yeah. What need are you addressing out there in the market? So I think we as bankers, we need to really critically look at what digital is doing for us and is going to do for us, and who the partners are that we need to partner with. And if we get that right, we're on our way. We're in the right direction.
Right. It will be very unfair if we move away from that particular question without involving Dr. Miles on the same. I mean, when you are seated, probably working towards a partnership or a proposal that has come your way from a fintech on a solution that probably you need to be actually jumping into. What do you think, because Martin mentioned some of the loopholes or the bottlenecks from the side of getting a hearing from the banks or those who they go to talk to, from your end, what do you think the fintechs should be actually improving on to be able to get a buy-in when it comes to, a call for partnership or a call for buying into the proposals that they bring on the table?
Yeah, great, thank you. For me, I always say it's about having a view of what you want to offer. And like Mwangala said, certain banks may have certain legacy systems, which if a fintech has understood, it makes it very easy breaking the ice. Yeah. So you would need to first of all know that certain institutions, due to maybe risk, due to safety concerns, etc., are holding certain services within a certain vacuum. So unless you can create a certain impression that yes, you can use technology, do this and make it better. So when it comes to process enhancement, those are always very, very critical. Certain fintechs come from process enhancement, some also come from product innovation, some also talk about improvement in service efficiency. So if you drive home any of these chords, you're more likely to make an impact, because interestingly, the trend is most fintechs are offering virtually the same. But what makes a big difference is the level of efficiency, the level of support you can at least bring on board to reassure the bank partner that yes, if we engage you, these imperatives are going to be met. And then finally, I always say cost is always not critical, but in some aspects, certain institutions look at putting the biggest, maybe it's a whole package, very, very expensive. Face value, anyone who looks at it may say, no, they're not ready to go at this. But you could do a phase-by-phase approach where you get in, so put your first foot in the door by giving a very good package. Let your prospective bank partner know that I'm giving you this because I want to enhance your value. Once that is a discussion, automatically you are likely to win the game.
Yeah. Interesting thoughts right there. Martin, as we speak, you mentioned earlier that some would tell you that I'm concerned about the older generation, or my major targets may not be able to understand this technology. But then to the naysayers who actually feel that technology brings exclusion, and as Mwangala had mentioned earlier on, we always feel that technology disempowers, while on the other hand, it can actually empower. Talk to us a bit about, for those who are listening to you right now, and they've had that line of thought that, fintech is going to make it difficult. I mean, technology is going to make it difficult for me to achieve my targets in reaching that particular client who I've been working with over time. What would you be telling them today, just briefly?
Well, I would say, first of all, is freeing yourself from geography is something that empowers poor people a lot more than rich people. First of all, the rich or the already included are typically more able to travel across geography, even locally, to the branch, to the next city, to wherever, to the next country, than the people that are not included today in the formal system. That's one. So freeing people from geography is one thing. And then the other thing is technology allows you to customize much more your service to the actual customer you're serving. So there is no conflict between keeping your business on catering to the middle class and upper class and including a whole new set of customers into the formal system. So you don't have to make the choice. You don't have to decide how are these people are going to coexist in my branch, how they are going to coexist in my call center, stuff like that. Is you can provide the appropriate service for each one of your niche segments, and that is what inclusion is all about. Is not trying to make the not included fit into the mold of the already included. It's a question of how do we bring them on board with the appropriate services for what they need, right?
Yeah, but while you're still on, there's been also a concern of costs. I mean, it's an issue that comes up for certain institutions when they're being introduced to some of these solutions, and they say that the solution providers or proposers of these solutions, they charge exorbitantly, and some exaggerate. And I'm sure from where you sit, you feel probably that these people might not really understand what it takes to actually develop this particular solution. It happens that way, no?
It happens, and there is a little bit of a catch-22 circle going there, which is if you don't have scale, you are expensive as a provider, and to reach scale, you need to sell enough, and there is this difficulty in achieving traction. So that is one point. In technology, traction and scale is very important because costs start going dramatically down to achieve traction. And the other one is how each vendor defines their business model. So Mwangala was talking earlier about how they moved from legacy systems to APIs and more modern systems. Well, the old IT providers of old were in the business of captive customers. They sold you once and they kept you forever because of the contracts and and switching costs, right? And today with the cloud, I mean, we are, for example, in our case, we are fully cloud-based and we charge fully variable costs, which means we only charge per real users a financial institution has, right? Has and use our product, not the whole customer base, the actual usage of our product in a given month. So, and we are not the only ones. I mean, we adopted that pricing model because that makes us align our incentives with our customers in terms of adoption. If your customers don't adopt our products, we don't charge you. And that is, I mean, it's not like we invented that. We are always trying to make it better, but that is something that is allowed by cloud technologies and software as a service and APIs and more open infrastructures, where we can achieve scale, and therefore we don't need captive customers. We compete on service, not on contracting, right? And that is what is changing. And you need to find the right vendors for each one of the things.
Right. Perfect. Thank you. Mwangala, you mentioned earlier the aspect of value proposition. Of course, I want us to move away and move this conversation forward, but forward from the sense of what Martin mentioned, that it is very significant when you free yourself or your business from geographical, definitions and reach. But when we look at the potential for actually including technology in your operations, how much of investment do you, from where you sit in your position, how much of investment do you allocate for research, R&D, for, when it comes to involving technological innovations? Maybe it might be a question that you're able to answer, but also I'll understand if it is not possible. But what level of investment are you putting, or do you think is very significant if put in the banking sectors to ensure that technology is fully embraced within operations?
Okay, thank you for that question. And let me be very honest with you and say that we actually don't have a research budget. We are a very, very small bank, very, very lean bank in terms of resources. But I've got a very, very good team. The IT team here is tops, they're better than the best. And so the team, we really understand where the industry is going and exactly where the key players are and what it is we need to do. But we're forced to be creative because precisely when this bank was set up, our resources were very, very constrained. So we had to be very creative and very quickly because we did not have the money to set up branches everywhere and all this costly infrastructure that people normally set up. We sat down to critically look at what is that we need to put together that would deliver and transaction volumes will just shoot up, revenue streams will just shoot up and all that. So we had to be very, very creative. And it's precisely because of the lack of resources. Sometimes I see good money being thrown after bad that forced us to be really, really focused and really creative. So to give you an example, in Zambia, there's not a single bank, whether it's a big multinational, that's come to Zambia and opened up and been profitable within 5 years. We actually this quarter reported our first profits within 2 years of launch. So it's been quite a phenomenal ride. And that's precisely because we said we were going to use technology to ensure that we move and get into the market as quickly and as widely as possible, using existing technology partners, using existing fintechs, using existing business models that are already out there. So it was a question of being very creative and thinking through who are the key players in this industry, what are they doing, how can we partner with them, what can we do differently, and this is what matters. You've got to be very, very creative. Just being given money, sometimes when you're given money, I have worked in institutions like that where you're not actually putting it to very good use, but sometimes when you're really, really constrained, it forces you to be creative, and that's what made a difference for us. And it's thanks to my team, really. We've done some great work here with very limited capacity and resources from a manpower point of view and from a money point of view. Yeah, so yeah, off the record, I can share the details with you.
Thank you. Thank you, Mwangala. I'm told we have about 2 minutes to go, and I want us to share the 2 minutes, giving our closing remarks, routing to branchless banking in Africa. Where do we go from here, Dr. Miles? Just really briefly.
Thank you very much, Eugene. It's been great engaging everyone, and I think it's more around collaboration. So once I've met a good prospective partner like Martin from Bankinly, it's about how we can connect, share ideas, and ultimately it's about meeting customers' expectations. So the future is bright once we work together, think innovatively, and then drive digital transformation. Thank you.
Right, Martin.
As I said, it's for me the road is about culture and partnership. Even when you don't have eventually all the research budget you would like to have, there is a lot of people like us and ours doing that research for you. So partnering is a way of achieving those end goals without having to invest all up front or all from the inside. So as I said, culture and partnership, I think, will take us there.
Perfect. Mwangala, really briefly. Mwangala, go ahead.
Yeah, no, it's been a pleasure being on this panel discussion. And yes, partnership is everything, particularly for an industry like ours that is going through major changes, and being a bit more creative, thinking out of the box, and realizing that banking is being turned around and it's changing very rapidly.
Right. Thank you very much. It's been a pleasure hosting the three of you. Of course, it's been an engaging one. And that's the only way you can tell is by just discovering that it's been actually 45 minutes. Right. So thank you very much. And I'm happy that we've talked about partnerships, and it's what I've been hearing the whole day. And I'm hoping that after this particular summit, we will actually put that into practice, and we'll be calling each other for partnership opportunities. Thank you so much, my panelists, for being a part of this particular conversation. Asante sana.
Thank you very much to you.
Right. Thank you very much. It is definitely time. I think, Gustav, you can guide on the closing session. I would love to take up that particular opportunity to close this particular session. But of course, it's been a great day one, definitely, for most of us who have joined these sessions. And tomorrow is another big day. And I hope you've enjoyed the sessions. And if you actually thought today was informative and great, then wait until we actually meet tomorrow for yet another great session for this particular summit. I want to thank our partners, those who have been able to participate through partnership, and our sponsors, Bankingly and GDS Modelica, Gift Confirmation, LFS Advisory, Trackwiz. We want to say thank you for making this particular event a success, and to all our panelists and those who have spoken in different sessions. We want to say thank you and God bless you. I'll see you tomorrow, same time as we started this morning. And I say thank you. Goodbye for now.
Bye. Thank you very much.
Bye. Advisory, we want to say thank you for making the event a success, and to all our panelists.